I think first off, like it's ridiculously scary, I think, to like leave the security. Cause like if you can do this, like you all look younger than me. So like if you're on this path and you're saving a lot, um, you're just kind of probably a natural saver. Like you're just not going to stay on this path if you're suffering every day. And then like, so then to pull the plug and retire, like it's basically, the way I look at it is like a big game of chicken. Like, yeah, it should last and you should make it. But um, yeah, I mean, it's really scary when you're a natural saver and you like that comfort of saving. And so um, my perspective has really done a 180, and like I really don't care at all about retirement, other than like it's good to be in a good position to, know that you have a long runway, like, especially like when stuff like is going on in the world right now. It's definitely a good feeling of security to know that you don't have to work for, even if I couldn't retire forever. I mean, I guess you never can say that with certainty, but I mean, I feel very comfortable. We have a good 20 years to figure stuff out. So that's a pretty nice place to be in. But I think that's much more important than the whole retirement thing. And I think if I had to do it all over, I would have actually left my job earlier full time, but I would probably maybe, I don't know if I'd still be working part-time at it or, but I definitely would have left earlier and started going part-time, just sought more balance in my life sooner. Because I mean, I'm still kind of figuring out now, what do I want to do next? I was actually I was just talking to a blogger friend of mine yesterday, and we were kind of just going over some things and trying to figure out what do I want to do next? Because I think that's kind of where I'm stuck right now, is like kind of in that gray area of like what do you want to do when you don't have to do anything?
Yeah, I can relate a lot to that, trying to figure out and understand, yeah, what does retirement look like? And it's in its natural form in the US, it looks like one thing, but for many it's not that. So you and Darrow write together at
Can I retire yet?
yeah, so you write together, but you haven't always written together, but you've known Darrow for a while, if I remember correctly, right? You've gotten to know him.
I was a reader of the Can I Retire Yet blog, and I always liked it. It was kind of like it's a little bit drier of a writing style that he has, but he's like super detailed, super just meticulous planner, and very realistic and not extreme. Like he retired at 50, and I really just kind of related to his message more than a lot of the fire blogs that are kind of more like just be optimistic and wing it and everything will be great. And so I really kind of related to him, and I was a longtime reader, but I'd never met him other than I reviewed his book and we exchanged like 2 emails. That was the extent of our relationship. And I just read one of his blog posts and I kind of sensed that he was burning out a little bit on it. And I just asked if he'd like to partner up, because my blog, my original blog was called Eat the Financial Elephant. And I never really did much to market it. And I had a pretty small audience and zero monetization. And so I was kind of looking to have a bigger platform to reach more people. And so I reached out to him, and so we started writing together right after I quit my job in 2017, December of 17.
So what's it like, you said it appears like everyone else on the phone here is a little younger, but what is it like knowing someone that's older and been kind of down this path? Because not many of us do, right? We can read articles from people like you and our peers, but we don't individually, personally know someone that's been kind of ahead of the path, that's older than us.
Yeah, I think that's tremendously valuable to have that person as a resource. And like, that's why, like, I still, I mean, I don't know, I enjoy talking to people and stuff, but like, I participate in our local group in Salt Lake City. And like, I like being able to give back, because like I know how hard that was not having anybody out in front of us. And like, do you guys mind if I share, like, do they know how we know each other and stuff? Mark and Nicole?
I don't think so, but yeah, go ahead.
Yeah,
so like Mark, I guess, reached out to me, and like when my original blog, and he just said, like, your story sounds so similar to ours, and like, would you have any interest in kind of meeting up? And I said, like, I'm writing my blog and I was working full time. I said, if you're willing to organize it. So we ended up putting together a couple of families. And like back then there was no ChooseFI meetup groups. I guess there was some internet forums like the Mr. Money Mustache and stuff, but it was all kind of anonymous. And so, yeah, I mean, I think having people, and like, we've never met in person, but we've, like, this video chatted, being able to see each other. Like, we've shared all of our numbers and kind of went over our plans and discussed things. And like, just being able to have somebody at that level that you can talk about this stuff with. Cause yeah, I mean, it can be a lonely path when you're the only person, and Um, it's like, am I crazy? Like, because why is nobody else doing this? Like, the math is pretty stinking simple, but nobody's like actually doing this. And so, yeah, I find it super valuable to have that. And now with Darrow, it's nice to have him as a kind of a mentor to both with the writing, but also just somebody that's 8 or 10 years ahead of me. He's about 10 years older than me, and he's been retired for I think 8 or 9 years now.
Yeah, that's awesome.
I'll just add one of the nice things too of having that group that got together and shared all that detail is that none of us had a financial interest in um, anybody's decisions one way or the other. So it's a little different than I think meeting with a financial advisor or that kind of arrangement where that can be valuable, but um, there's always a little bit of a not always, but I think in a lot of cases there's a financial incentive for them to advise you one way or the other, or maybe their background is just such that this is the kind of path that they would recommend, but maybe they don't know, of any other way of doing things like the financial independence route or whatever. So it was good to have a group of several people just kind of reviewing your plans and looking at your numbers and just letting this is where I think you're looking strong and this is what you might want to consider and that kind of thing. And that was like 1 or 2 sessions that we did that, and then we just kind of moved on to talk about other things after that. But
yeah, and I think there's so much softer, there's the nuts and bolts of where am I missing, where are some of the weaknesses that maybe we're overlooking, right? We're in an echo chamber here. But I think it's nice to have outside perspective on some of the softer things with some encouragement and different perspective as well. Uniquely, we were the only ones that didn't seem to move to a different part of the world or country. Everyone in our group, we've had lots of cross country or at least moves to different parts of the US. So tell us a little about what that's been like. You moved, and then 2 other couples, they also moved their families, but tell
Yeah, so we knew we always wanted to move west, and so we kind of timed. It really wasn't so much like hitting a number when we were going to leave my job, but we kind of timed it with before my daughter was going to start kindergarten. And so, like, because we knew once she got into school and started having her friends, and it was going to be so much harder. And so this was something we talked about. And before I had any knowledge of anything financial, we were actually going to move out here in 2012. My wife had a job offer in Salt Lake City, and we found out she was pregnant. We didn't think we could have kids because we were married at that point for like 11 years. And so we kind of decided to stay near our families when we were having our daughter. And then it was kind of always in the back of our head, like, if we don't do this, we're always going to wonder, what if we didn't or didn't move west? So we just decided to do it. And so we kind of timed it around that. So I quit my job in December and we moved in July. So we only had like 6 months in between. And it was a lot harder than I thought. I was kind of the point, I was just so burnt out on my job. I actually saw a question about how many years I worked. I was like 16 years as a physical therapist, and that was enough. I was ready to be done. But I was surprised. Like I worked at the same company for 15 of those 16 years. So, and I was actually, when I left, I was the second newest person at my company. So it was like a family atmosphere. So it was harder than I thought, like leaving all that behind and then picking up and moving across the country and like leaving our support system. Yeah, there was a lot of challenges to it. It wasn't like, it wasn't as easy and happy as I thought it was going to be. And it took some time to adjust. And that was really, I think we did everything about as good as we could. Like, our neighborhood is awesome. I think we chose the right area, but yeah, just change is hard. And so I think if you could space things out and not do it the way we did, it probably would be a better idea. It's a lot of change at one time, but again, it was kind of a timing. It was more of a life issue than a financial issue and stuff. So
yeah, that segues really well to, I was going to ask you, we've talked about it a little before about, it's a leading question, but all roses and butterflies, this reaching FI or getting close to FI or this process, right? You said moving across country, doing it all at once, that was a lot. We know some people that haven't done it all at once, but yet life still throws challenges, right? I guess I just am curious your perspective. You've written a little about this, and I'd encourage folks on here to look at your article. I can't remember the article that you wrote, but the fact that it's this isn't the one magic bullet. It is, the pursuit of FI can do a lot of great things and help right now in the pandemic, supports a lot of great flexibility, right?
Yeah, and I think it kind of goes back to what we were talking about before. Like, I think like you read a lot of these like fire blogs, and honestly, I was one of them. Like, I think you're kind of just naive. Like, yeah, like everything's going to be awesome, and like we're doing this, like we're gonna like in our case, we're going to move west and just kind of be ski bums and do that all the time, and like everything's going to be awesome. And like even in our little group of 4 couples that we had, like everybody was super optimistic. And Nicole and I were just talking about this recently, but like looking back now, we've all had substantial challenges. One of I mean, I guess I could share this because it was public on the internet and everything. But one of the couples was the couple that did the blog Plan, Invest, Escape, the Pie family, and he just passed away this past week. So he ended up within 4 months after they retired, he developed a glioblastoma brain tumor and passed away. So like, it's not like this is some magic bullet. I mean, we're all dealing with this coronavirus thing. Like, there's just so much stuff. Like we talked about my challenge moving. But I think even knowing that, I think that even reinforces more like,
Right.
I can't imagine going through this from a position of being in debt. And like, there's so many people like not able to sustain themselves for 1 month without this stimulus check coming and stuff. And it's crazy to think about like where, like I said, I mean, this definitely throws a wrench in things. Like who knows where the economy is going to go, who knows where things are going to be. But I mean, I still feel extremely confident we have at least 20 to 25 years to figure stuff out. So I'm pretty sure we're going to do something. I can't imagine being in that position. So I think I don't want to be like the downer saying like, yeah, it's not as great as like you picture it will be, because you're going to still have challenges. It's not like this magic bullet, but by the same token, I think that even reinforces more why you want to pursue this path. And it's definitely a good position to take on these challenging circumstances from.
Yeah, and I echo your comments. I think, having a little more realism earlier on in the journey is good. Also inspiring, right? To have roses and butterflies ahead of you, because there's a lot of great, but not the only, right? This isn't the only magic bullet. That makes me think of the the Stockdale Paradox article that you're friends with Coach Carson, right?
Mm-hmm.
Rates at is it just coachcarson.com?
Yep.
I'm showing my
I believe that's what his site's called.
Blog names. So he put out a pretty cool article that Mark and I were talking about recently that I didn't think I would want to read during this pandemic time, but I'd encourage y'all to just at least look at it. It was kind of an interesting thought about the dangers of wishful thinking, right? And how it plays out. And he gives a lot of references to historical prisoners of war and different people that had more of a realistic grit and the long-term, long view, but going through and having that wishful thinking in the moment is maybe not as helpful. So I don't know, that I found that pretty interesting. It sparked a little conversation. Do you have any thoughts on that, Chris? I don't know if you got to see that article.
No, I think, yeah, I did. I read it actually. I do like a roundup of like my favorite articles for the month. I actually have that in there. I had already read that when you sent that to me. But yeah, I mean, I think that's like, you definitely have to be optimistic, but you also have to be realistic. And I think that's where having like just different people to go through and look at your plan. And because you can definitely like, you start to read some of these fire blogs and you kind of get overly optimistic and, oh, nothing can go wrong. But I mean, kind of like we talked about in our case, like all of the 4 of our couples had different challenges, and everybody's going to have challenges. So I think it's important to acknowledge that going in, and like optimism is great. And I think we're all optimists, but you also have to be a realist and just kind of go in knowing and having contingencies. And like, we have so many contingencies in our plans that, again, like it's just something that as these challenges come, we kind of anticipated them, and we didn't expect it to be all rosy. And I think that's a really important part of your planning.
Good stuff. Do you guys have questions? And sorry to make some noise.
Just one thing before we go on. So I put in the comments, I put that the article you were talking about, does fire make life harder? That was my article.
Yeah.
If you click through that and just take a look at it on my blog, and it's a really great discussion in the comment section. And I would say but it's like cherry picked, right? It's our audience that we cultivate, and they're reading our stuff. and it's probably 80 to 85% positive comments. Just, like this is normal, like this is but that article got picked up on MarketWatch. And if you can search around for it, I don't remember if they retitled it. But read it was one of the editor who published it on MarketWatch sent it over. It was one of their most read articles that whole year. It had like over 1 million views. And like, I would say 98% of them are like just destroyed me. And so it kind of speaks, I think, to the value of like having a peer group who kind of gets it, and because I think a lot of people, I mean, it's a story as old as history. Like, money is not going to make your life perfect, but like, it's like, well, what do you have to be unhappy about? Like, you're 40 something and you shouldn't have retired and you're an idiot and you're a moron and whatever. And yeah, so like, I think just I don't care if you read my article, but it is worth looking at the comments and then like Google around and find it on MarketWatch and look at their comments. And it's quite a contrast. And it just speaks to the value of like a group like this and how important it is to have that peer group.
Yeah, Chris, I actually wanted to ask about that because, I constantly think about that. In the ChooseFI main group, we've actually talked about like, there's a lot of like haters on there now. And I'm not blogging, I'm not going out and writing content and trying to, contribute. But I'm just curious how you continue, when you get the hate or, when you have somebody that gives a comment that, maybe is good or maybe isn't. I appreciate that peer group point, but I was curious if you could expand further on that.
I just kind of like, it depends on, there's two different types of kind of pushback you can get when you publish something or put yourself out there. I like disagreement, and I answer almost every comment and I'll engage it as long as it's respectful. And, like if you're saying like, I disagree with your philosophy for this reason, or, because I learn a lot. Like, we have a really knowledgeable reader base, and I learn a lot from my readers. I learn a lot from the comments. And I think that interaction is very helpful to other people. So I try to keep it positive, and I try to give feedback on every comment that comes onto our blog. But like, when it's something goes on MarketWatch, I just kind of like, I have to like look at every now and then just to kind of for the humor of it. But yeah, I don't read them like, if people are going to think what they're going to think. And like, if it's on my own blog, I just delete those type of comments if we ever get them, which are extremely rare. But yeah, I just don't deal with that.
So Chris, you started blogging back in 2015 or 16, was it?
I might have been earlier than that, even probably, yeah, around then, 13 or 14, I think.
Okay. So you mentioned one way that your perspective has shifted is that you have less of a focus now on like the retire early piece of it. But are there any other ways that you can think of that like your mindset or your perspective on money, on fire, on all that stuff has shifted since you first started writing and then kind of throughout the middle and like where you're at now?
Yeah, I think one thing, I think when you start reading like the 4% rule and like how much you need, I really changed on that a lot. For one thing, again, I didn't really appreciate how scary that would be to walk away from a career and a high savings rate and everything. So that's one thing, but also just how many assumptions go into that math. And like, I respect, like, I don't know if you guys read Big Earn, but like, I know Karsten and I'm actually friends with him, and I totally respect his work and everything, but he makes it like, it's almost like down to like 1/10 of a percentage point of how much you can withdraw. And like, there's so many variables. And when you have such a long time frame, it's kind of like that whole, like if you're flying from like the East Coast to the West Coast, and if you're like 1 degree off, if you're going to like San Francisco, like you can end up like somewhere up in Washington State or down in like San Diego or something, because you have so far to go. So like, they put such a certainty on this, like whether it's the 4% rule or like his like 3.25 or whatever he has it at. But I think like, that's just so overdone, and like, you just have to go in with some flexibility, and like, that's changed so much for me. It's just not that simple, because there's so many variables that you just can't know and you can't account for. And like, the big one I think is healthcare. Like, if you think you need to save every penny to be able to pay full cost and pay full deductible, you're talking $500,000 to or more than that, depending how big your family is and how long your time frame is just to pay for healthcare. And if you have the subsidies, you've just wasted years of your life saving for healthcare. But on the flip side, if you just, some people just say, well, we're going to use subsidies and go into it that way and maximize them and pay nothing for our healthcare. And if that law changes, which it can in a year, now you're that $500,000 to $750,000 short because you didn't plan for it. So that one variable alone is so huge. So like the certainty that people talk about it with is nonsense, if you ask me.
Yeah. What else, guys? Any questions for Chris? I would love to hear a little about what it was like with the book when it came out. I mean, we've had the privilege of knowing what a great writer you are for a while now, but you know, seeing the book is fun, reading that. But what was that like? It
was exciting. I mean, it was such delayed gratification. Like I started working on it in December of 2017, and I really had the first draft done before we moved. So like we moved on the 5th of July in 2018. So the first draft was done by then. And I thought that was the hard part of writing a book. And that was the easy part because you just sit down every day and you make progress and you see progress. But the editing process, the like finding an artist, getting it through all the proofing, I didn't even know there was 2 different types of editors, like going through that, the couple of rounds with the first editor, like marketing it. There was just so much to it. It was just overwhelming. And I don't know, it was kind of exciting and also sad though, like when it finally came out. It was like super exciting to put it out in the world, but also a little bit like, wow, it's done now. Like what's next? Because I put so much time into it over 2 years. So yeah, but I think probably the coolest thing was like the doors it opened. As far as like when we got out there to promote it and stuff and allowing me to connect with people. So that was, that and just getting some of the reader feedback was really rewarding.
Cool. Jillian told us, I think I shared with you that Jillian was on the podcast last week and she said her husband needed to read your book to get a little up to speed.
Yeah, I met up with them a couple months ago and I was telling them how my favorite, I can't think of the blog. I think it's called Mad Money Monster. But the woman writes the blog and I guess her husband's not into it at all. And so she started reading the book and she's like, this is really good, but I know this stuff. You should read this. And that's kind of who I wrote it for, is like people that kind of know, but like don't know everything. It was more of like making this accessible to normal people. And like, so her husband actually wrote the review on her blog and he loved it. And so I told Jillian, I was like, maybe he should read the book. And I don't think he has though. So I don't know. I haven't talked to her for a while.
Oh, Antonella, nice work. She found your Market Watch story.
That is it.
Chris, I had a question.
Shoot.
So I just was curious if you could kind of give us, your thoughts on rebalancing. I saw you just posted the article and I did read through some of it. I can't say that I could summarize it right now, but I know that's, something we've talked about before and I thought you had a good take on it.
Yeah, so I guess my thought process on it is like I said, like there's so much uncertainty when I'm 43 now and my wife is 41, 42. And so like there's just such a long time frame. So like we're still, in my mind, we're still kind of playing offense. Like I think traditional retirement, you're just kind of playing defense and you're like protecting your portfolio and just making sure you don't run out of money. So she still works. She works about 28 hours a week and I thought we were going to have a pretty good year with the blog. I think that's all gone away now with the advertisers and stuff. But so we're still being pretty aggressive. So yeah, we rebalanced and that was the biggest one-day purchase I've ever made. Like it was down a lot in mid-March and that was kind of our time to rebalance. So yeah, we went all in on, well, not all in, I mean, but we followed our plan. And so we made a big move towards stocks out of bonds to rebalance. But what the article was about is like my parents, I managed, so they came to me and asked me to start helping them. My dad's been reading the blog. And so I read, so I went through their portfolio and we were kind of just talking and like they are in a good position where they are in traditional retirement. Unfortunately, my mom's health isn't good. I mean, if she lives 10 more years, that would be great. And my dad is in his 70s. So, I mean, potentially he could have 30 more years, but it's not likely, and not likely that the spending that they're doing now, like they travel, they come out here a couple times a year. They're going to Ireland this year. They were going to, they've been to Florida and like, they still only spend about 3% of their portfolio. So it's like, for them, why take the risk? Like they've won the game. So why, even though it's kind of their plan is to be like 50-50 stocks and bonds, why shift over and buy more stocks at this point when it's putting them at risk, when they just don't need the risk, they don't need the stress mostly. So that was kind of my take on it. So yeah, we definitely rebalanced. But for them, I kind of advise they just stay put. And I think we may not even rebalance. Like we usually do at the end of the year anyway. And I think we'll just kind of let them drift. If it drifts back up, great. But I mean, I wouldn't be surprised if this takes a long time to recover. We'll see how things go. And I just don't see a reason for them to keep buying more stocks at this point in their life. It doesn't really make sense.
Good stuff. Any other questions for Chris, or should we get into some fun categories together?
I do have a question regarding your asset allocation at 43. Are you still aggressive, like 80-20 or 90-10 or 60-40?
Yeah, so we just keep like a year of expenses in cash, and it's roughly 5%. It's actually a bit more than that now, but we just kind of staying at a year. And then the rest of our portfolio, so originally it was like 5% cash, 15 bonds, and 85 in stock, or 80 in stocks. Trying to do the math here on. So yeah, so we're staying with that. And I think my big concern now is just bonds. The yield is so low. There's almost no way I can imagine they're going to like that. Your income's going to keep up with inflation with bonds, and like the rates are so low that if rates go up, your bond value goes down. So I just don't, other than for the reason that we had them like right now to sell them to rebalance. And that was kind of the other part of our rationale that went into rebalancing. Like bonds don't really serve us much purpose other than as to have something to diversify and to hold their value, so we can sell them to buy more stocks, because we don't. We're not at a position where we're really saving anymore.
Gotcha.
Thanks for sharing, Chris.
Yeah, and I do think we'll probably at some point move more towards bonds. I mean, I'm assuming rates are going to go back up. I can't imagine they stay this low forever, although I've been thinking that for 6 or 7 years, and they are at all-time lows right now, or super close to them, if not. So who knows? I'm not very good at predicting the future.
What else, Team West Michigan? Anything?
Oh, I just wanted to ask, how old were you when you began your FI journey?
So that's kind of a tricky question. So my wife and I, before we were even married, so I grew up, my dad was an entrepreneur. He had a small photography business. And so we did okay just because my mom was super frugal. But we did okay for that reason, but never had a big income or anything, and like never traveled, never did anything like that. And then my wife, her family, I would say it was just flat out poor. Like I know they filed bankruptcy when she was in high school, and that kind of scarred her. And like, so we both, like for different reasons, like my parents from a positive way and my wife from a negative way, just kind of had this natural frugality. Like she didn't want to kind of go down that road that she saw growing up. And my parents just pounded into me, like, that's what you do. Like, you don't go into debt, and you don't do this and that. So we started off living off of her salary. And I kind of, while I was in grad school, I was already paying to get her out of debt before we got married. And then we just kind of stayed forever. We lived on her salary. So before FIRE was a thing, this was in 2001 when I graduated, we've been doing it. But like where we were screwing up, like we had no idea what we were doing with investments. And that's actually why I started writing, just because we just got totally ripped off, screwed over by a financial advisor. And because we were so ignorant, we had no idea what we were doing. And that's what kind of got me passionate about learning this stuff and then writing it to teach others and help other people. So I would say we got serious about it in 2012. And that's when my daughter was born. So that's kind of what made me like realize I kind of had to be a grown up. And yeah, because we were going to move out here and just kind of be ski bums. That was the original plan when we found out she was pregnant. So I guess the saving part we started in 2001, but like actually having a plan and figuring stuff out and learning the investing and the tax planning stuff, 2012.
Nice.
Mm-hmm.
And then I just wondered, what setting were you in as a physical therapist? Did you do outpatient?
Outpatient ortho and sports. Yeah, I was a PT and an athletic trainer. So like we did, I worked as an athletic trainer at the high school setting, like doing outreach to high schools. And then I was like my main thing was like as a physical therapist though.
Nice.
Are you a PT or?
I'm a speech therapist.
Okay.
I was gonna see if you did any travel therapy because I know a lot of therapists use travel therapy to kind of accelerate their income and savings rate. I was just curious if you ever looked into travel therapy or.
Not starting out, but my original plan was maybe to like go back to Pennsylvania for the summer and to be able to spend time and visit with family and take my daughter back and do a travel rotation.
Yeah.
Because like I said, my wife still works part-time. Our original plan was we would both just kind of, so like we were saving, I mean, at the end when we had no mortgage, we were probably saving close to 70% of our income. So we figured we could each work 10 hours a week, and with way less taxes when you're making way less, still not even really be drawing down, like only working a quarter time. And then when I had the opportunity to write the book and everything, I just kind of walked away from it. And I'm still actually licensed in Pennsylvania, even though I live in Utah. So I'm obviously not super serious about pursuing a job, but yeah, that's kind of the big decision in my head now is like, do I even want to keep my license or just let it go? I'll expire in the end of December, and I think I'll probably just let it go.
Nice. Yeah, I know I have some licenses in states where I haven't been in a long time, so I need to let those go too.
Have you done travel?
I did. I did it in Texas, but I also got a license in California, and I never ended up going. So I think I need to let that one lapse.
Yeah. I have a friend named Jared Casaza. I don't know if you've ever heard of him.
Yeah,
Yes.
yeah. I talk to him sometimes just through Facebook, but I've never met him.
Yeah, he's a really good guy. And if you have questions about like travel stuff, like I know he's kind of pivoted. I don't know if he's working this year at all or not. Like I think he was doing one rotation, and then he and his fiance is a PT also, and like they were all over the world last year. They basically like worked one quarter, but he was starting to make enough off of. He was blogging as like a fire blogger, but then he
Right.
got really more into the travel PT, and he was making enough money off of referrals of other travelers that he was able to just kind of quit his job. And yeah, so he's like 10 years younger than me, and he's already done so.
Yeah, yeah. I saw his. I think he posted on the main ChooseFI group that he hit FI at some point, and then the stock market crashed or right after that. So I don't know. That's funny. You know him too. That's cool.
Mm-hmm. Yeah, he's a very legit good guy.
Yeah.
Mm-hmm.
Yeah.
I have a
Chris,
question.
oh, sorry, go ahead, Matt.
No, go ahead, Mark.
I was just going to ask you, Chris, what blogs are you currently reading? You know, obviously other than your own, what do you enjoy reading?
Do you read your own? Like, do you go through that multi-editing process of the book?
I mean, I guess I read it after I write it. I mean, I edit my own stuff, and I read Darrow's stuff still. Yeah. I read pretty much everything that Big Earn writes. I like his writing. I like the way he thinks. In the fire space, I'm trying to think if I read anything else in the fire space. Like I read more, I think, traditional financial planning stuff. Like I like Michael Kitces's stuff. Ben Carlson, it's called A Wealth of Common Sense. It really kind of covers the market. I like reading that. Mike Piper, it's called The Oblivious Investor. Just really simplifies stuff. He's a CPA. That's a really good blog. If you go to on my blog, like we do a monthly roundup, and if you just scroll through like the past like 6 months, you'll see recurring people. You can pretty much tell who I read. I'm trying to think off the top of my head. I still like J.L. Collins. I think he's I like the way he thinks and simplifies things. I tend to be pretty simplistic with stuff as a baseline, but then I like to add like a lot of nuance and just I think a lot of people just look at the numbers, and I mean, I'm not a big numbers person. I was a physical therapist, and like Kim, my wife, has to, like, I don't know how to make a spreadsheet. Like if like she disappeared tomorrow, I couldn't do my spreadsheets anymore because I don't even know how to do it. So, but like, I'm
He's
not a
a
numbers
math person, guy.
Yeah. Yeah, she's a math whiz. So, but yeah, I think what I can tend to do is attach that human emotion, and that's kind of my strength as a writer, and kind of making it relatable. Like I said, like I came into this from knowing absolutely nothing about finance, especially like the investing tax planning side. So I think that I can make it relatable to those type of people like that. And that's kind of the type of readers the type of writers I still like is people that take complex concepts and make them simple. So.
Do you have a non-fi one you like to read?
Well, I think like a lot of those are pretty mainstream personal finance, like Wealth of Common Sense and Oblivious Investor. Those are definitely not fire at all.
I guess non-financial. I should have been.
Oh, non-financial. Like I'm not a huge blog reader. I'm a big podcast listener. Like I'm a huge Tim Ferriss fan. I love probably the first podcast I ever started listening to, and I still listen to everyone. It's called the Dirtbag Diaries. It's like about skiing, climbing, outdoorsy stuff. Just very good storytelling. As far as outdoor blog, there's one called Semi Rad. I like. It's just funny. Guy's goofy. He's a good writer.
Yeah, so
Yeah,
mention
that's
that.
kind of stuff
So you've mentioned skiing, but you haven't mentioned climbing. You guys are big into climbing. The dirtbag piece of it, like you jokingly said, all these people, that live out west and they get to climb and they get to ski all day, right? Like the dirtbag millionaire, right? I mean,
Yeah, that was my original post I almost quit writing after like a month, and I wrote a post called Dirtbag Millionaires, and just kind of like the whole concept was like taking the best of like the professional lifestyle, which is like actually having money, like, because the dirtbags, like, it kind of is glamorous for a while, but then like you'd see people like that somebody would like fall and break an ankle and they'd be totally screwed because they had no money, or that somebody would get pregnant and like they'd be screwed because like they have no savings, nothing to go to. So like I didn't want to live that full dirtbag lifestyle, but like everybody, like I worked in a doctor's office, and like I don't know if anybody else is medical other than you said you're a speech therapist, but like I mean, as a general rule, like medical people are pretty miserable. Like it's just like you're go to school forever, you're like drowning in debt, and then you think you're going to come help the world, and then you get out there and it's like all this bureaucracy and insurance and paperwork, and just it's like, so you see all these people that have all this money and like they've been doing it forever and they can never retire because like they're doing the country club, and I don't know, like I get like the whole fire thing is kind of judgmental. I guess I can hear my judgmentalness in it, but like I don't know, like it's just nobody connects the dots. Like you don't have to live this way, and like, but that's what everybody just does. So I knew I didn't want to do that. So kind of taking the best of both worlds. And that was my dirtbag millionaire concept.
What else, guys? Well, I hope for your benefit, Chris, that when the snow melts here soon, hopefully the climbing places are open, even if the ski resorts are closed. Hopefully you can get out and climb.
Oh, it's crazy. Like, so we live, like we can walk to climbing areas here. And like, normally so there's mountain biking and climbing and hiking trails, like right 2 blocks from our house. And normally if you're biking or hiking, you can be out for hours and see maybe 2 or 3 climbing groups. And you can't get on a rock now. Like people are everywhere. They're just swarming on stuff because there's nowhere, like ski season would be going on and that's shut down. And the climbing gyms are closed. The regular gyms are closed. There are just so many people out. So yeah, we're basically street walkers at this point. Like if we get up early, I'll go hike on the trails a little bit, but yeah. A, I don't want to get hurt, and B, there's just too many people out. So like I haven't mountain biked, I don't think, at all. And we climbed like twice and we just gave it up for a while. So
awesome. Well, hey, thanks for sharing. Sean, do you want to do categories? What's the group feeling?
I have one more question.
yeah, shoot.
So you said medical. Matt's medical too.
What do you do?
What's that?
What do you do, medical?
Oh, I'm in acute care medicine.
Okay.
Um,
Sorry for calling you miserable.
So, no, it's okay. I'm really frugal when I don't live the rich doctor lifestyle. I'm kind of like following the footsteps of Leif Daleen, actually, physician fire, and I'm his group as well, Physicians on Fire. My question is about what do you do for health insurance at age 43? Because I think that's kind of like one of the big challenges for early retirees is how they tackle health insurance.
Yeah, I think that's the $1 million question. So, and we don't have a good answer. So what we do, my wife works she's currently working 28 hours. Her company's out of Washington, D.C., so she works from home part-time, and it's super flexible. Like we'll ski during the week, and like she'll get up and maybe start at like 5 in the morning and work till 9. Then we'll take our daughter to school and drop her off, and then we can ski all day. And then if she has to maybe do 2 hours in the afternoon or something, we come back. So that's kind of how she gets her hours. And she works that much for healthcare. Like otherwise she would probably work 15 or 20. Like I think she likes her work. It's an amazing company, and like they cover us all with her working part-time, but she kind of keeps chipping away. Like she was at 32 and then she went to 30 and now she's down to 28, and she's thinking about pushing down to 24 this year. So we'll see. But yeah, I mean, that's the reason she works as much as she does. That's how we get our healthcare.
Gotcha. Okay.
Yeah, I think if they say no, probably what we'll do is at 20 hours, depending on like how I'm doing with the blog, I may have to set up a retirement account, and we would max out her 401k and just get our income as low as possible and use the ACA with the subsidies to do that. We originally thought we would use the healthcare sharing ministries. And then after she had our daughter, she started having these autoimmune. That's kind of goes back to why she's tried the gluten-free diet, circling back to how we started our conversation. But like she started having these autoimmune things, and like we took her to the hospital one night. I thought she was having a stroke, and it ended up being nothing. But like, it's just too scary. Like you can't not go to the hospital if you might be having a stroke, because you don't want to have a huge deductible or have it get denied if you're on a health care sharing ministry, which they would do. But by the same token, you don't want to be running there all the time and racking up these bills. So I don't think a healthcare sharing ministry would work for us. And I've written in pretty good detail about the healthcare sharing ministries. I wrote about our approach to healthcare, and it's pretty robust. If you go to my blog, you can check out some stuff. But I've wrote a lot about that stuff.
I can attest. There's a lot of detail there. Good to reference.
Right. Thanks for sharing.
Unfortunately, the more I learn, the more I realize like we want to hang on to employer provided coverage as long as we can, because it's just, there's so much uncertainty. Like if we knew the law would stay the way it was, I'm sure we could either use the subsidies and get really cheap insurance, or if we made too much money, that's a pretty good problem to have and just pay for our insurance. But like not knowing what the future holds there, and having, like I said, 23, 24 years till we get to Medicare, it's a lot of uncertainty to, I kind of admire, and I also kind of think they're crazy, the people that just say, I'm going to quit and just use that and bank on it being there, because I'm not so certain that it will be.
Yeah. I mean, last year I was hospitalized for like sepsis, like in severe sepsis, and without insurance, my bill would have been like $27,000. So, and I'm on a high deductible health plan, and I really had to navigate like just combing through the bills, and I found out some errors and had a hard time figuring it out. So I kind of, I mean, that's one of the big challenges with healthcare. Actually, it's a broken system here in the U.S.
Yeah, like somebody was asking about what I read, but like a book that I think is great. Like for you, it's kind of going to kind of be preaching to the choir, but for people that aren't in the healthcare system and just don't get how broken it is, like it's a physician. His name is Marty McCary, and the book's called The Price We Pay. If you don't kind of get how broken the healthcare system is, you ought to read that book. And he really, in my opinion, just hits the nail on the head with it. It's a good book.
Okay.
Well, too, if you think about this coronavirus, like that's really shining through about some of the stuff in terms of how, like, insurance is tied to employment, and how that is a big problem because people are losing their jobs. And then if they get coronavirus, like then they're screwed. And so I hope, I mean, this is maybe super optimistic, but I hope that maybe can shed a light and maybe start some change in that area. I don't know.
Yeah, and like we talked earlier, like how I'm generally an optimist, but like I don't know, I'm just not optimistic. Like they're so, like the interests are so strong, and there's so much money, and I don't know. I hope I'm wrong, but I don't think like the changes that I think that need to happen, I don't think there's many people that have the will to do that. And I don't know. It's a tough problem. That's way beyond me.
Yeah.
Well, there's one thing that's awesome, that's optimistic, is there's not a lot of people that have the will to save as much as everybody on this call is probably saving. That gap between earnings and spending is probably over the long haul way bigger with this group than anyone else. So I appreciate, just hearing you say the will to whatever. I think, the will over the long term. Chris and I were just talking earlier this week. Like, do people have the the stick to it-ness to stay with the saving for the long haul? Because it's over a long haul, right, Chris? You were talking about however many years, a long period.
Yeah, and like you,
it's been a long time.
absolutely, and like you mentioned, being a fan of Physician on Fire, but I just commented on it. He wrote an article just this week about, and it was really kind of mirrored my story. He's younger than me. Well, I don't think he's younger than me. We're about the same age, but being being a physician, he came out later than me because their training is longer. But he talked about starting around 2007 and as an investor. I started like in 2001. So like, I think a lot of people think like fire is just this phenomenon of like, he just rode a bull market straight up. But like, for him, like he had to start in that. And like, for me, I had to start in 2001 after a huge crash. And like, so you have to have the conviction to start like when not people aren't super optimistic. And then I had a substantial amount of money, but like I said, like we didn't know what we were doing, but we had accumulated a lot. And so we lost a lot in 2008. I mean, we didn't sell anything, so we didn't actually lose it, but on paper we did. And you got to kind of have the will to go through that. And so I think like we're more of the people that I know, at least, I mean, I guess there's some super frugal, super aggressive people that do it in 7 or 8 years or whatever. But like I said, I don't know the younger fire crowd, but like the people who I know, like we've been through at least one, if not two, pretty substantial, two of the bigger crashes in the history of our country. So yeah, I mean, that's kind of part of the whole process.
Sean, I noticed, were you laughing when he said younger fire crowd? Do you want to think of yourself as younger too, or what?
No, I just love the response that I don't know the younger fire crowd. Like I just found that funny.
Oh, fun.
Well, who do you guys read? Who are the more, I like Purple Life. Like I've met her, like I met some of them at FinCon. Like I know some of the people, but I don't know them well or like know their work. Like, is there more, like who would you say are like the more popular fire bloggers now? Like, I guess I'm kind of drifting out of that.
I would say anybody I follow is Mr. Money Mustache, ChooseFI, and I think y'all are very, very similar, age range.
Mm-hmm.
I know he's a little older.
Mm-hmm.
I agree, but I also watch some fire YouTubers now too. They're a little bit more into real estate, but I've been watching them a little bit more just because you can do other things instead of focusing the whole time on reading. You can set it up and listen to it while you do other stuff.
Mm-hmm. Are any of you real estate investors?
I am.
Like, are you having like people paying?
No, mostly syndications.
It's so recent, right, that they said we can't evict people. So I was just telling these guys that our tenant is still paying. She works at Walgreens, our newest tenant. He works at some medical device, Medtronic. Yeah.
They make ventilators, among other things, so they're hopefully pretty.
So they could choose not to pay, and technically we couldn't evict them, but they both should keep having jobs and an income. So yeah, it's tricky. Yeah.
The last stat I saw was like nationwide, 66 or 2/3 basically of tenants are paying, which is the positive way of saying that 1/3 of them aren't, which is a ton and more than has ever happened ever before. But 2/3 is still 2/3, right? Like.
Well, I saw a stat there that like 20 people either don't pay or they don't pay on time most months anyway, like, which seemed really high, but so.
Yeah, I think, so I mean, there's probably a difference there between late payments or, like there's people that are just chronically late and they'll just incur a $20 late charge every month and pay it, 2 weeks late or whatever.
Mm-hmm.
Or like we get some split payments, like.
Yeah, or they'll pay a little bit here and a little bit there.
Here, a little bit there, like that's.
And I think that's different than what we're dealing with now, which is, it could be a couple months where people, at least, right, where people aren't paying at all. And there's even this sort of like, you see this, I guess, movement out there of just people doing like rent strikes and things like, well, if they're telling us we can't go to work, then we shouldn't have to pay our rent. So there's a little bit of that momentum gaining steam too. So I'm not sure where that will go, but yeah, I don't know. It's an interesting time to be a real estate investor too. I think most landlords in general, like the idea is like, let's meet people where they're at. Like, let's not play hardball. Let's, work with them if they've lost their job or if they're unable to pay rent. Let's see what we can do and like tack it on to the end of their lease or have them pay a certain amount, however much they can pay now and then pay the rest, in a couple months or whatever. Because it's a lot cheaper to do that and keep a tenant in than it is to, even if you can't evict them, you can't evict them, but even to evict somebody is expensive. It costs you months potentially of being out of rent and potential turnover costs. If they're mad at you, then they could trash your place or whatever. So that's what we've seen.
Yeah, that's something we keep kicking around. We haven't had the courage, and I'm feeling pretty glad that we've been sitting on it right now. So
I think there probably will be opportunities now to buy at much cheaper prices because in a lot of areas, real estate has been pretty inflated, I think, over the past few years.
yeah, ours is definitely one of them. So yeah, that's what I'm kind of interested to see where things go.
Yeah, I am too. I think like anything else, like my opinion is more kind of like stocks, right? Like we're not necessarily timing the market and trying to buy low and then just hold on to them. It's more like let's invest through it, and some of the properties will be, will have bottom higher. Some of them may be a little bit lower, but hopefully over time we'll sort of dollar cost average into it, and we're buying cash flowing properties, so we're not necessarily doing it just for potential for appreciation or whatever, which can go up or down.
We're in some syndications too, Matt. Did you see your rentals or your vacancy for the month of March? Did those drop? Like how many?
Economic vacancy, you mean? People
Yeah.
not paying. Yeah.
They didn't release a report yet, but so far the distributions are still on time, and we have the preferred equity. So I haven't seen any decrease in the distributions.
I don't know if ours did. I can look.
But
a little bit, yeah, not much.
Maybe April is where we'll see it.
Yeah.
I'm
Part of it
curious,
is market dependent too.
Part of the country.
Part of the country and what are the jobs? It matters what industries and what jobs your tenants have.
right?
If they're all retail, then you're gonna have a hard time. If some of them are, in healthcare or some other areas that haven't been hit as hard during this, then
Yeah, ours is in like Florida, Orlando area. So I'm sure it's hit hard and I'm anticipating that instead of like at year 5 they'll sell, they're probably gonna extend it like at year 7 or even year 10 if it's really a bad like a recession.
yeah.
Sean, what do you think? What should we chat about? Should we do categories? How's everyone feeling? Is it late and sleepy time?
Great chatting.
Thanks, Chris, so much for coming on.
Yeah, thank you for sharing.
Yeah, no worries. It's only 7 o'clock here, so.
I was excited to buy you your book and as a prize, but I suppose I'll be giving it to Matt.
I did my best.
Yeah, if you all want to stay on, we can still do the game. If you don't, we could gladly just stay on and chat.
I just clicked over to that article. I see I'm up to 197 comments. I was just seeing I'm gonna get myself depressed reading what people say about me.
Oh, don't do that.
Oh,
I
don't do it.
doing that.
I got a little sidetracked during your discussion because I started reading those comments.
It's
And
brutal, isn't it?
yeah, it's interesting. It's some juicy stuff there, but there's also like a pretty healthy debate. There's people who've come in and have put in their 2 cents, like defending you and your choices too. So it's a lot of back and forth. There's a lot of just healthy debate, back and forth debate.
That's
And
good.
Chris, you had me so convinced after your spiel about the good comments on not listening to the haters.
Well, I was curious. I had to see. I haven't looked at this for a long time, but I remember it was really bad. I knew it had a lot of comments, and it was really bad. So
Maybe we should all comment on this one.
We should all go in
balance,
and read.
Yeah.
balance it a little
Good.
out.
Let's drown all the negative comments.
Yeah.
There you go. Yeah, I love it. That's funny.
must be a member of Generation Y.
That's the same as millennials, right?
Yeah, you guys are Gen X, right? You're 43 too?
Yeah.
43 is Gen X?
Gen X.
They're
81
calling millennials people that are like 18, 19, 20. They're
Yeah.
calling them millennials. I'm like, no, they're
80 to 95. 80 to 95.
Right.
Okay, I'm still a millennial then.
I know, for a while the line was in a different spot. And then
It was, yeah.
now you're one of them. I'm like, great, excellent. What is the new generation called?
Z. And then I don't
Oh.
know what the one after Z is called.
That's not very exciting. They didn't get a name. Is it going to be the quarantine? Did you guys see that
Yeah.
meme?
It'll be something related to the virus.
Oh, God.
V, Generation V.
19.
'Cause they
Yeah,
like
with like the
virus.
baby boom that's gonna happen, right?
Yeah, baby
Do you
boomers.
think
But
so, though, Aaron?
new
Do you
boom.
think so? Because I don't know. I wonder.
What?
If there will be a baby boom after this. I don't know. Like with all the uncertainty.
It'll be
I
the
don't know about
stratified population of the folks that actually enjoyed being with their spouse and then the folks that didn't enjoy being with their spouses.
Funny.
Somebody actually named their newborn baby COVID Bryant. That was crazy.
Oh boy. That's
Yeah.
rough.
COVID.
maybe a
Bryant.
dog, but I don't know about a kid.
COVID
That's like a
Bryant,
double
Kobe-
hit.
COVID,
Yeah,
right?
it's-
COVID, right? Wow.
Let's combine the worst 2 things that happened in
Yeah.
2000
Yeah.
2020 and name our kid that.
Oh,
It's
That's crazy.
legit.
I wonder if we'll see another division between essential versus non-essential workers with the baby boom.
Mm.
Yeah.
All good questions.
Let's have this conversation again.
I think we need predictions now. We'll have to put up a poll on the group and we'll get
Oh, yeah.
predictions and the winner will get something. An
Oh,
Aldi
what-
bag.
What did the answer end up being for Sam's? Who won? The lowest it was gonna go?
So far it's
Somewhere over,
been
maybe.
35, right? So I think most people were in that section.
So state the question again for those of us that
So it was what was the biggest what did you expect the stock market to decrease?
Oh, yeah.
We're obviously still in the thick of it, so it could still
Yeah.
go down or up. But I think the dip was what, between 30 and 35%.
Yeah.
And I think the bulk of folks picked that, and I picked 75.
I remember that
Wow.
part.
75,
Get out there.
I thought it
Sean.
was going to be 60 plus.
Wow.
I just think it's so overvalued to begin with, and like this is pretty extreme, and so it's like kind of that double whammy. But
I'm an optimist.
Again,
Maybe like
I'm terrible at guessing. That's why I just bought a whole crap load. So because I have no clue.
All right, I'm gonna share my screen if you guys we'll do one round and we'll see how this goes, okay? If you want to bolt, it is 9 o'clock, so you guys are welcome to. If you want to stick around, this would take all of 100 seconds is what I have it timed for, and then it takes like 5 minutes to score it afterwards, but the scoring is the funny part. So what it'll be is it's 10 categories, 100 seconds, so about 10 seconds per category. You will get a letter. You have to choose a letter that fits the category. There are 10 different categories. Choose the letter that fits the category. And if somebody else chooses the same word in the same line that you do, you both lose and do not get a point. If you come up with something unique and we say, you know what, that doesn't make sense, and we vote you down, you don't get a point. If you get something that's good, we will give you a point. If you get something that's FI related in any way, if you can argue that it's FI related, we'll give you 3 points if we agree. So this is mob scoring is what I'm going to call it. The mob decides how you're scored. And yeah, time flies. So what we'll do is 10 categories. I'm going to share my screen. The letter is C. So you will see that here in a second. The letter is C. There will be 10 categories that reveal themselves. And they're not quite ready yet. So does anybody not see the shared screen right now that says C in the upper left corner? I'm going to make this bigger so it doesn't get you guys in trouble.
Do we come up with just a concept or a noun or
a word,
a word,
usually a word. And let's say you have a category and it's like, hey, actually I could write 2 words or 3 words. They will count as 2 or 3. The one thing you cannot do.
Oh, sorry. An example we did this last week was breakfast, or it was the letter B. And so one of the categories was breakfast food. So I wrote banana bread. So I got 2 for that.
But you couldn't put like banana bread, like, and then put an adjective. I can't even think of like a B one.
Big banana bread.
There you go. Bitchin' banana bread. You couldn't get it for the bitchin', but you could get it for banana and bread. All right. So you guys can see, can everybody see that well enough? Does it look like these lines are going to be big enough? So the first one you can see is places in Europe. Does that look big enough?
Yeah.
Anybody can't see it?
Is that, you said spices?
No. That's not a category yet. So it's C is the letter. C is the letter. And then you have to come up with specific words. So places in Europe, you could put the city and the location and get 2 points. The city and the country.
Like Canada.
In Europe.
Yes.
Mob rules.
Do that.
Canada.
Yeah.
Nice. Well, now 2 people are going to pick Canada.
Planted the seed.
All right, and you guys can't see mine, right? You can only see the screen, the C.
Right.
Yep.
All right, I'm gonna hit play. You got 100 seconds, and don't say it out loud. Go. we are at time.
That was not enough time.
No, that's the point. Got to make it tough. So if I can get back to out of shared screen mode, I will. Yep, there we go. Okay. Go ahead. First was places in Europe. Places in Europe. Go ahead and put your item.
I don't know how to spell it.
Brittany and I have
Oh, man.
0.
Oh, I had that too.
Steve has 0.
Oh,
Czech
good
Republic.
job.
Sicily starts with an S, I think, right? Cusco's
No?
in Peru. That's a no. Cornwall, that's Europe. Ooh, Czech Republic and Czechoslovakia. What do we think? Czech Republic's the current name. Czechoslovakia is the old name.
I think they're the same thing.
Yeah, let's cancel it. Copenhagen, Mark, you can only count 1, by the way.
Oh, I thought you said you could count more than 1.
Nope.
Oh.
Just
One is for me, one's for him, but then you wrote 2. Yeah.
So if Copenhagen was in Croatia, you could get 2 points for Copenhagen, Croatia. But
Oh, I gotcha. Okay.
yeah, so you get 1. So it looks like Cornwall's got a 1, and then it looks like Copenhagen has a 1. Anybody else?
Cusco.
Peru, right?
Yeah.
All right. Category 2, computer parts. Anybody got one? C drive. CPU.
Oh,
I'm a techie.
I wrote something. What'd you write?
Charger counts.
Good one.
Oh, CPU.
Yeah.
Markin.
Aw, man.
Matt got chip. Chromebook. That Chromebook's not a part though, is it?
It's a part of the Chromebook. You can't have a Chromebook without.
What do we think about computer card? Like graphics card?
I have no idea what I was thinking. Like,
Chris, is that a 2-pointer or no? Chris says no.
let's
So
Google
no.
it. Let's see. Do it. Go.
All right. So I think Matt gets a point for chip and CPU. Those are different wordings. Are we good? Mob? A point each?
CPU is duplicated.
No, but both of us had CPU, so it doesn't count.
Yeah, CPU's a no. Charger, I think that counts, right?
Yeah. Thanks.
Yeah.
No, it's a computer panel. So no.
Ooh, Nancy's going back to the 80s. All right, Nancy says yes. All right. Anybody need clarity on their points? You good?
Wait, did I just get 2? Nancy, are you telling me I got 2 points?
So
Oh.
I have a question. So you might have said this. So do you have to pick something that no one else has picked to get a point?
Technically, yes. Yep.
Okay.
All right, so Nancy says yes to computer card and Chris says no. What do we think, Mob? Give your thumbs up, thumbs down, a la Caesar.
Brittany said.
Oh,
no.
come on, guys.
All right, it looks like it's a no.
If it was a 1-pointer, I'd be more lenient, but
All right. All right. All right,
You gotta
number
earn.
3, things found in a desk. Oh, crayons is knocked out. Calculator's knocked out.
Oh, computer was smart.
Nothing.
Crayons, computer, and calendar. Do we have any beef with any of those?
Crayons is
Crayons
doubled up.
is twice.
Oh, my bad. I was thinking a different one. Calculator is doubled up. Calendar, contact list, and computer. Any beef? We good?
Paper
Okay.
calendar? What is that?
It's good.
Calendar?
Nice work, Steve.
I have a calendar in my desk. All right, computer programs. Oh, yeah, COBOL. I heard that they're actually looking for COBOL developers. So if you know your 1960s code, you
Go to
can.
New Jersey, right?
Yeah.
That was almost my first job out of college. They tried to hire me as a COBOL programmer.
You said no?
I said no. It was for an insurance company, and I was like, no thanks.
All right, so it looks like we have chat and calculator. I think both of those count, right? Those are both computer programs.
Yep.
Do we think that COBOL and C++ are true computer programs? Because they're technically computer programming languages.
Oh.
I think
think
it's the benefit of the doubt.
Oh,
What do you think,
boy.
Mob?
Oh, you guys are
I've got
rough.
like 3 votes in.
I'm clueless.
2-2. All right, you guys get it. There wasn't enough to vote you down. You get it. CAD CAM, I'm guessing that's one. Or I know CAD and I know CAM, but is CAD CAM a program?
I'm not sure.
We'll give you a point. Civilization, the game. All right, next, things you make. Compost.
Oh, that's a good one.
That's a good one.
Oh, and there's enough different versions of cake. Oh, cake is out. Cupcakes is in. I think cheesecake is one word, right?
It's one word.
And I think Chris, ooh, do we count that for 3? It looks like a 3-pointer.
Wow.
Yeah, it is.
That was good.
Yeah.
Wow,
Wait.
that's good.
That is a 3-pointer. What's crocheted cap? What am I saying that wrong?
Yeah.
No, like if you crochet a cap.
A hat, a baby hat. Yeah.
Like a baby. I got a crochet.
Yeah.
I'm giving it
my
to
baby.
I think that's legit.
Yeah.
2 points.
Yeah, things you make. You're right. Absolutely. Sorry, I was thinking of foods because we all focused on food. All right, things you get tickets for.
Uh,
A crash. Oops.
Ooh,
no.
conflicts out.
Like nobody's got this.
Cabaret. Dang.
Concert. Oh, there. That one's already canceled out.
Well, the Bengals. Crash is out.
Oh, that's funny. I didn't put ticket together with that.
Oh, yeah. Yeah, that's a good one. So I think Cincy Bengals counts. Cabaret counts. What do we think about car show?
Yeah.
Yeah.
Cinema counts. All right, number 7, items you take on a trip. Contact case.
2 points.
Fans are shocked.
Pandering.
I wrote chapstick.
All right, it looks like we got all 1. Can ChooseFI book count for 3?
No.
No,
it's a
related.
buy-related item.
Oh, yes.
Is it the hardback version?
Yes. No.
Hardback is 3 points.
There we go.
So Robin wrote charger. I wrote camera charger.
I was thinking phone charger, so technically it's different.
I was going to write cell phone charger, but I thought someone else would make
Oh.
that because that would have been a 2-pointer.
All right, Mob, what do you think?
Steve.
I'm always thumbs down though, so that doesn't.
No, because he wants to win. He doesn't care.
I want to win.
Chris, you're quickly learning who the most competitive one is out of the bunch. Steve.
Hey,
Steve's been watching too much Gladiator. All right, things you do at work.
Oh, you're gonna hate this. Oh, complain. That's a good one.
Ooh, CC, nice.
But we're like
We
one.
cancel each other off.
is CC 2 then?
I think CC's 2.
Oh, that's pretty good.
CC people.
Calculate.
Complain. I don't know, who captivates at work?
A motivational speaker.
Yeah, my boss is a motivational speaker. He's captivating. I'll give it to him. Chill, Matt, nice. All right. I don't think there's any objections to any of those. 2 for conference call, but it's mine. All right, 9, things that you wear.
Oh no.
Someone else wrote.
Ugh,
Oh, I should write it though.
to write it, it's not Mac.
Canceled it.
Wait, so Nicole and Mark, are you guys working together or do you have separate ones?
No, ours are separate, but we're typing them both in here.
Okay, because I was going to say, I was curious if Mark came up with corset.
You did.
I did.
Now are we talking about like right now or like 1880? Back in
We'll
style,
never
right?
know.
Do we have 2 contacts?
No, I forgot the S, and so then I fixed it, and then I thought, oh,
Okay.
I've done that. But
Steve, please, please, please wear a cape the next meeting. I think Cap's the only one that got canceled out,
No.
and everybody else gets a point. I did not get one. All right, last one, villains. Oh, yes.
Corona. Oh, funny.
Ah, 2 Cruellas.
Cruella.
I think
Too many
Corona
Cruellas.
should get a lot of points.
Lots of Disney fans here. All right, folks. It looks like we got 1 for Corona. That's amazing that only 1 person came up with that.
and that's a really good one.
Yeah.
And there's no COVID-19 either, so dang. All right. So count up your points. Go ahead
Wait,
and
what
put
did
them
we
in.
decide about me and Antonella doing the charger
We're
versus?
good. We're good.
We got it?
We're
Okay.
Got it.
good. We just ignore Steve about that.
I only got 4 points. We got to play again.
We can play again.
Last week you weren't here.
I know. Yeah, you guys have unfair advantage. I'm rusty.
No, you should have been there last week.
We put in the work.
Sean, 9. Now that's rigged.
No.
Yeah, did you see the questions ahead, or it's
I saw them when you guys did. I'm not winning anything.
nice work?
What was
Oh,
that?
Brittany, 7. Nice work.
Sean, what was that site that you did that on?
Yeah.
So I will say this, their server has been bogged because it's just like somebody's site. And it got out on like a major news source, like after some folks had been using it for a while. So I think they must have just upped their server, but it's been a little spotty if it works. But this is the best version. There's other ones you can get online. So it's been a nice COVID-19 Zoom game.
Yeah, that's cool.
Do you guys have any other games that you've played or like done with family online?
I haven't done it yet, but I've been hearing some good things about House Party, and I might be doing something like that with some friends this weekend. It's kind of like Zoom platform, but then you have I think there's trivia and a few other games that are like integrated into it.
Sweet.
That has
Expect
been
a
great.
review.
You ever play Code Names?
Yeah.
Yeah.
That works, but like you have to have the game to give the clues.
We
It's like
played that at a
We
meetup.
played that as a group, guys.
Yeah,
Remember?
Yeah.
that was fun.
That was super fun. It was
Matt,
a little learning
we were on
curve.
the winning team.
What's that?
We were on the winning team, so we get a point for this next game.
Yeah, I guess you not only have to have the game, but you have to have 2 people in the room where you have the game to give clues.
There was a game I used to play online. It was like one of the first online like trivia games. It was called You Don't Know Jack. And I haven't played that in this is like probably 18 years ago, but I think it's still out there. And I think I read somewhere that someone said it's like one of the top online games still. So maybe something. to
We
check out.
first got our Roku. That was on our Roku. But you don't know Jack.
Oh.
It's actually really funny. Like the announcer guy is funny. Like he tells jokes during the game and stuff. And anyway, something.
Yeah,
that-
I used to play it too, but I remember it being free, and so I looked it up because I heard people talking about it, and it is not free anymore.
Oh, it's not? Okay. Yeah, I do remember it being free too.
Yeah, or I'm looking at it wrong because there were so many different versions too. So I don't know. Maybe I wasn't looking in the right place. But.
Okay. Yeah.
Well, no pressure. It's now 9:30. I'm willing to run another round if you guys want, but that's about all I'm in for.
I think I'm gonna bounce.
We're gonna
Past
bail.
my bedtime.
Yeah.
You guys, thanks for joining, Chris. It was great to have you join.
Yeah, it was fun.
Thanks, Chris.
Good meeting you all.
Nice to
Thank
meet
you.
you. Thank you.
You
Nice to meet
guys have a great week. Bye.
Bye, take
Bye.
you. Stay safe.
Take care.